Good morning, traders. Welcome to today's market update for 19th March. Today, we are dividing into the latest market movements and key updates on four major assets: dollar index, crude oil, spot gold, and AUD USD. And also, let's talk about the war which is happening between Israel and Gaza. So let's talk about the dollar index, which measures the value of greenback against a basket of six currencies. Stabilized after falling to a 5 month low of 103.2, traders reacted to a major fiscal expansion in Germany while monitoring geopolitical risk associated with the ongoing negotiations between US President Donald Trump and Russian President Vladimir Putin. The index rebounded slightly from earlier losses as sentiment shifted. US data continued to trouble the dollar, which fell against the G10 currency except the yen at the start of the week. The Federal Reserve, which will announce interest rate midweek, does not seem to be in a position to provide much relief to risk sentiment as pricing inflation expectations still require caution about rate cuts. Further downside risk for the dollar could stem from Trump's phone call with Putin regarding Ukraine. Any progress towards Russia accepting a ceasefire plan proposed by United States and Ukraine could put additional pressure on the safe haven dollar and yen. The dollar index could continue to fall below the level seen before last year's presidential election. Since the US dollar index fell below 104 at the beginning of this month, it has been struggling below 104. However, momentum indicators such as 14-day relative index, relative strength index, and the moving average convergence divergence MACD on the daily chart show oversold condition and a temporary rebound may occur. The key initial resistance is at 103.78 and 104, the main rising resistance level in the past 2 weeks. If the US dollar successfully breaks through the latter, it is expected to challenge the 14-day moving average of 104.62 and even the recent high of 105. The immediate support level is around 103.2, which is 18th March low. Despite some signs of stabilization, the overall sentiment remains fragile amid ongoing geopolitical and economic uncertainties and further downward testing of 103 market psychology level is the first support point, and then power and then the lower line of the Bollinger Band near 102.81 will become a key support. Consider shorting the US dollar index near 103.38 today. Stop loss can be 103.5, target is 103 or 102.9. Oil prices fell on Tuesday as concerns about global crude oil oversupply intensified. Meanwhile, US stocks weakened and investors remained cautious ahead of the Federal Reserve's upcoming monetary policy meeting, which is expected to provide more clues about the impact of the trade war on the economy. WTI crude oil rose in early European trading on Tuesday and traded near a 3 week high of 68.5, up from Monday's close of 67.26. Crude oil prices extend their upward momentum as the United States vowed to continue its attack on the Houthis. Unrest in the Red Sea led to higher energy transportation prices and gold and crude oil prices as oil and gas cargo transportation was forced to take longer routes. A series of positive Chinese economic data and special plans made by Chinese officials to stimulate domestic consumption also drove WTI's gain. On the other hand, the escalation of the global trade war and the bleak economic outlook caused Trump's protectionist trade policies may exert some selling pressure on the black gold. Trump's aggressive tariffs on imported goods are expected to raise corporate costs, drive inflation, and weaken consumer confidence, thus dealing a blow to economic growth. Crude oil prices have fallen from high of 79.37 at the beginning of this year and encountered support at the 65 level at the beginning of this month and rebounded slightly, down about 18% to the resistance level near 68.5. testing the resistance of the descending trend line. If buyers push prices above 68.1, which is Monday's high, and $68.45, which is 21-day moving average area, with the key support of bullish golden crossover pattern on the moving average convergence divergence indicator, then this will negate the recent decline and put the psychological price of $70 in focus. If the price breaks above this level, a higher high will be formed. If the resistance range of 68.1 with 68.45 cannot recapture, sellers may test the support at 66.11, which is the March 13th low, and $65 this year's low. If the price falls below this support, it will form a lower low and put the 2023 low of 63.65 in focus. So today, you can consider going long on crude oil around 66.35. Stop loss could be 66.2, and target can be 67.6 or 67.8. So let's talk about gold. On Tuesday, the price of gold rose by more than 1%, hitting a new high and breaking through the $3,000 ounce mark. The market believes that this is because of Trump's tariff plan, as well as increasing tensions and trade uncertainties in the Middle East have stimulated the demand for safe haven assets. The price of gold has soared again, currently reaching a record high of 3,003 8.5 on Tuesday. The rise came after Israel carried out military operation against Hamas tactical positions and buildings, driven by continued trade tariff uncertainty and strong safe haven demand amid geopolitical tensions. Trade war concerns also weighted on investor sentiment as new tariff threats were exchanged between the United States and major trading partners. Gold demand remained strong, supported by continued purchases by ETFs and central banks, especially China, which was which has increased its gold purchases for the fourth consecutive month. Investors now turn their attention to the upcoming central bank policy meeting, especially the decision of the US Federal Reserve later this week. The Fed is widely expected to keep interest rates unchanged amid rising trade tensions and economic concerns, with market only expecting two rate cut this year. Gold traders have multiple reasons and arguments to push gold higher, as market began to predict $3,200. This sets a clear target for the coming weeks and months. However, traders need to remember that once the market is positioned in one direction, that is when a reversal
To wrap up, today's market is shaped by geopolitical risk, economic data, and central bank moves. Stay tuned for updates and have a great trading day ahead.